Previously, when we had discussed financial accounting, we had understood how to interpret a balance sheet, an income statement, a cash flow statement. We had learned how to calculate various financial ratios from all these different statements and then compare the financial ratios of your company against those of your competitors to see how your company is performing. Now, this type of financial accounting was more external facing because all of these various statements are available in the public domain. Now, when it comes to managerial accounting, it's more internal facing, and it's about how to improve the internal process within your organization and how to keep your management accountable. Now, one of the tools that we had been introduced in a course entitled Managing Planning and Control was a tool called Balance Scorecard. Hi, my name is Arjun Chaudhary and welcome to Mission Happiness. You see, to assess a company's performance, one should not just merely use finances and finance numbers. I mean, there are other factors that need to be considered to evaluate a company's overall performance. Now, under the umbrella of managerial accounting, we were introduced to a balance scorecard, which is essentially a document that is created to keep your internal management accountable to certain success metrics that the organization deems important. Now, let's go through the step-by-step process of creating a balance scorecard for an organization. And let's use the example of a company called Dollarama, which is essentially Canada's largest discount retailer chain. Step number 1, identify your company's dominant value proposition or strategy. Is your company's strategy that of operational excellence or differentiation? Now, because Dollarama is an organization that purchases high volume of products from its suppliers at a very low cost and then sells these exact same products to its customers at a very low price, Dollarama's dominant value proposition or strategy is that of operational excellence instead of differentiation. Next step, identify your key financial strategies of your organization and the corresponding success metrics. So let's say Dollarama's key financial strategy is to increase revenue growth within the organization. Now, associate success metrics with pertinence to these strategies would be number of new Dollarama stores opened in a given year, average transaction size per store. You see, these metrics have to be quantitative in nature. So once you have this strategy of finances and the corresponding metrics, you go ahead and add it to a balance scorecard. Next step, identify key customer related strategies now and the corresponding metrics. Now, for the purposes of this video, we'll just focus on the metrics going forward. So some of the key success customer related metrics would be customer retention rate, net promoter score given by customer. Once you have these metrics, you go ahead and add these to the balance scorecard. Next step, identify key internal business process strategies and corresponding metrics. Some metrics would be inventory turnover rate, percentage of inventory delivered on time and as ordered. Next step, identify key learning and growth strategies and the corresponding quantitative success metrics. Now, some of these metrics under growth and learning strategies would be employee retention rate, internal promotion rate. And then the last and final step is identify key corporate social responsibility strategies and quantitative metrics associated with that. So some of these metrics would be percentage reduction in lost time injuries, average number of hours of health and safety training per employee. So now once all of these various strategies and success metrics have been added to the balance scorecard, what an executive does in an organization is he or she goes and picks and chooses certain metrics from each of these categories and creates an executive dashboard for themselves where they closely monitor all of these success metrics to assess how the company is performing and its internal management. So there you have it, ladies and gentlemen, a step-by-step process of how to formulate and create a balanced scorecard under the umbrella of managerial accounting. Remember, happiness is the key to success. I'm Arjun Chaudhary.